everyone, Marco Palmero, founder of Ulysses in Dubai. In this video, I want to talk with you about mergers and acquisitions in the Middle East, especially small, medium-sized acquisitions. Because I feel that in 2025, we will see a huge increase in M&A activity, primarily across tech and healthcare, but also in all other industries. And I feel the reason why that is the case is because many companies are realizing the potential of the Middle East, but also other regions like APAC, for example. And the fact that is very interesting and that I want to discuss with you in this video is that the perception of companies has evolved over time, and now people are realizing that acquisitions are by far one of the best ways to enter a market that is very complex like the Middle East. So I'll be sharing with you some ideas and examples that I got from my partners who spent most of their career in this region. And fundamentally, they saw the evolution of the thought process of people that wanted to come here. Back in the day, it was a collaborative approach. Then once these countries started to open up for international business, many players wanted to establish their business in the Middle East. They did that from scratch, and back then it was very advantageous because there was no infrastructure. But now we are seeing a situation where a lot of the stuff that has been built over time has created a very solid environment, especially in certain countries like the UAE, for example. And competition is growing by the day. As a consequence, it is becoming increasingly difficult for players, for companies that are operating in other nations to enter markets by starting a business from scratch. And this holds true for markets like the United Arab Emirates. It might be less true for Saudi Arabia because the country is still opening up a lot and they still need a lot of support in terms of building up infrastructure. But I think it is becoming more evident that acquisitions are a reality here in the Middle East, and they will become a growing reality as we progress, because we are now gone to we have gone through a process that was building up these countries. Now, as these countries start to settle and establish themselves as solid economies, we will start to see a lot of transactions happening in business, and companies that are sold and acquired by different players to conquer market share or potentially exit certain markets. And I feel that if we want to dig a little bit deeper into the UAE, my perspective is that we will start to see a huge increase in M&A because the market here is becoming very saturated, but there are a lot of small, medium-sized businesses operating across the whole country. If I remember correctly, 95% of the total business generated by the UAE is coming from the SME, which means that fundamentally there is still a lot of fragmentation in the market. The saturation is real, but the market is saturated by small players. And so there's a huge benefit that companies can access by consolidating assets together, sort of like a blue ocean, if we want to call it this way. Other markets might be more competitive from a mergers and acquisition standpoint. So Europe and the US might be challenging places because a lot of companies are in the market. Private equity groups are there, and different competitors are fighting for the same deals. But over here, there is less proclivity towards M&A, and the ones that understand the advantage they can gain by buying companies and consolidating them together will have the upper hand in the next 5, 10, 15 years. So I feel that, as we went through phases, people evolved the way they approach and interact with the Middle East and with the United Arab Emirates. Now, in my opinion, we are at a stage where people understand that starting something from scratch is very expensive in terms of time, money, and resources they need to commit. But an acquisition enables them to invest maybe even less resources, but access something that gives them a solid foundation in this region. My experience has been that a lot of companies that wish to enter the region might want to do that, but they have a limited time frame to execute on the strategy, and so they cannot really build a 5-year plan or 10-year plan to grow a location or a business from scratch, but they would rather work with somebody that is already there, that has market share, that has established infrastructure, so that they can build from that and expand quicker in this particular market. In addition to that, I see a lot of people being concerned about navigating regulations, and setting up a business from scratch might be a process that is quite complicated, but instead they can acquire something that already has gone through all these regulatory procedures and just get a decent foundation for their business. Some of the recent cases that we looked at, and some of the companies we have collaborated with in recent months, progressively shifted their approach from, I want to establish a branch of my own business in the UAE, or I want to start a new brand in the UAE. They changed that idea down to, I want to buy something here so that I can then build from that and grow my brand or grow my organization in the region. And I feel that makes a lot of sense, because again, it enables businesses to tap into a blue ocean. There are really not a lot of players targeting small, medium-sized assets here. So the accessibility to businesses is huge. But at the same time, there is a necessity for consolidation. And a lot of times it is important to realize that if you start an acquisition plan in the UAE, probably you have to buy multiple businesses in order to grow your market share. Unless, of course, you're planning to buy one and then expand that one in multiple locations. But that, again, from my perspective, wouldn't make much sense, because why would you buy one business if you then plan to open up new shops? You can just start a new one from scratch and just focus on opening up new facilities. From my perspective, if you start buying a business and you buy one, then your entire process of entering the region becomes acquisitions, and it is much easier to then buy 2, 3, 4 businesses, consolidate them, create your foundation, and then from there decide what you want to do. So I've seen many businesses doing that successfully. My perspective is that UAE is still a bit different compared to other countries of the Middle East, simply because it's more competitive, it's more saturated, and more open compared to other nations. So it is probably the most challenging place, but it is also the place where you have less obstacle that you need to overcome. So the competition is high, true, but also UAE are the gateway for Middle East business. So if you establish yourself here successfully, then you're going to have a much easier time expanding in other nations. But it's not true the opposite way around. So I've seen many businesses wanting to establish themselves in Saudi Arabia, for example, in trying to buy something there or starting something from scratch there, and they failed miserably. Even big organizations with a lot of track record in a solid business in their home country, we're talking hundreds of millions on their balance sheets. The problem is that some nations in the Middle East are still catching up, and from that perspective, they're not mature enough to enable players to enter and be successful by deploying their own strategy. There's a lot of adaptation that people need to go through, and sometimes corporate and other types of businesses are not open to that adaptation process that they need to go through, and so they end up struggling in that market and being kicked out. On the opposite side, once you establish your business in the United Arab Emirates, you get to learn a lot about the market, and you get to learn in an environment that is already, I would say, very international. So it's less closed to new idea, and so you progressively learn in adapt your strategy so that it can then fit other markets that might be a little bit more complicated. In addition, you also build track record in the region, which is critically important, both if you want to start a business from scratch or if you want to acquire assets. Because, I know it's going to be hard for a lot of people to digest, but your track record back into your home country means zero when you are entering the Middle East. Of course, unless you're Apple or Amazon or what have you. But the point I'm getting at here is it doesn't matter if you're generating hundreds of millions of dollars in your home country if you don't have a presence in the Middle East. And that's interesting because people value your own track record in the region more than they value what you have done in other places. And so from that perspective, UAE are a very good idea because they enable you to build that track record and then enter more difficult markets in a much easier way. I've seen many businesses that have done that being much more successful than the ones that wanted just to straight up go to Oman or straight up go to Saudi Arabia. And yeah, it takes a bit more time. It might be a longer trajectory, but in most cases, the long way to the goal is the only way that is going to take you there. And so I feel that, for me, a 2025 perspective, the M&A landscape is going to be quite vibrant, not only because people realize that there are opportunities to enter the market through acquisition, but also because there are a lot of businesses that are going to be available for sale. We source deals in many different industries, and I've seen there is a lot of assets that are currently available both on the market and off market. So that will be particularly interesting. There's also a progressive shift towards the APEC region, which is interesting as well. But I feel that there's still a lot that can be found here in the Middle East. Tons of businesses that will become very good opportunities. And I think, from that perspective, the Middle East will remain a blue ocean for a long time, probably for the next 5-7 years. It will still be a good opportunity for companies to buy assets here because M&A are catching up, but they're catching up at a very high level, at a very corporate level. There's still very little that people in companies do when it comes to SMEs, other than maybe private investors. And so that represents a huge market that companies like yours, for example, could target. Because again, you're fundamentally competing against nobody. You're competing against, individual investors, maybe people who are specifically knowledgeable about an industry and want to buy a business for themselves. But other than that, there's very little that is happening, and that is, from my perspective, very attractive for a potential buyer because that you are going to access one, tons of opportunities, and two, opportunities that are not necessarily competitive. Now, the tricky part comes when you, of course, start sourcing and finding these opportunities, because you will find out that not a lot of them are accessible or as accessible as they would be in other markets. And that's where I guess the DealFlow and off-market DealFlow service that we provide comes to the table, because it is really important to find the right opportunities and the best possible opportunities available in the market. And my experience tells me that off-market deals are the way to go across the entire Middle East. We've been in so many business deals that I can now see that the deals that are listed on the market are not generally the ones that are top performing, so to speak. So a lot of accessibility from a certain perspective, but also more difficulty in finding the right deals. I feel that, from a 2025 perspective, we'll start to see a lot of action, especially given the fact that we got a reduction in interest rate. It might be easier to borrow money. So that is also a huge plus. But in addition to that, I feel that the key element here is going to be the realization that the Middle East is a region that is of interest to many people, and entering it becomes much easier when you acquire assets instead of starting something from scratch. not only because you shorten your timeline in the time, the go-to-market time, but you also reduce your risk considerably. You find something that is already working and then you build from that. And that is really, really valuable, because acquiring know-how in the Middle East is probably the most important thing that companies can do. Understanding really how the region operates and finding people who already know how to deal with the region is going to be instrumental in growing a business and scaling in this particular region. So those are some considerations about M&A in the year 2025. I hope you find this video helpful, and I'll see you in the next one.